According to the latest KPMG report, Poland ranked first in the CEE in both the number and the value of M&A deals between 2020 and 2022. Today, my guest is Chrystian Poszwiński, head of CEE at HWCF Partners. Welcome.
Welcome. Good morning, everyone. Thank you for the invitation.
Okay, today we'll talk about M&A market. Very interesting because I think it's both for the Polish companies that are more and more active abroad, but also in terms of what is happening here in Poland. And as mentioned, Poland seems to be in a good position in terms of this sector. But before we'll look into the future, let's take a look in 2023. What the previous year was like for the M&A market for Poland?
Well, I would say it was quite interesting because it was way different than the previous years. So when you see what happened in the so-called COVID years, so let's say between 2020 and 2022, we had a huge uptake in the number of the M&A deals. Interestingly, this number of the deals has actually grown in the last year. But why am I saying it's interesting? It's mostly because the value of those deals has lowered significantly. So we saw a higher number of deals, but with a lower value, meaning the whole market was basically much lower. Mm-hmm. This, of course, impacted not only the market players such as private equities or the actual target companies, but it also somehow influenced the advisors. So meaning the law firms, the investment bankers, the tax, financial advisors, insurance brokers, everyone basically on the market. Moreover, if you look at 2023, generally, for example, from the VC perspective, you could say that the approach of those funds was much more conservative. So in the previous years, so before 2023. Basically, we could have seen investments in many different sectors, and let's say that it was much easier for them to spend the money on any target, basically. So as long as the targets seemed interesting or potentially valuable for them in the future, they would just invest in that. And what I think 2023 shows is that this approach has definitely changed. Mm-hmm. So what we see on the market, and especially because we work mostly with the private equities, is that they pay much bigger attention to how the company is generating profit. Where is the actual value within that company? So not necessarily just the current operational business, but what is the potential of that company to grow, but also to grow in a situation, in a hostile situation, I would say.
In terms of macroeconomic and geopolitical issues. Mm-hmm.
Exactly. So, what we're seeing on the market is that there is a huge shift. And of course, that shift is connected with, on one hand, high inflation, on the other hand, somehow the war that is to some extent, of course, impacting. But what we also see is that throughout the last couple of years, there were a lot of events that happened that were highly unexpected. And what we see right now is that investors pay much more attention to how the company is actually prepared or how the company could react or develop in terms of, in this situation where the market conditions change and they are slightly harder than before.
If you look at 2023, which sectors are those on top of mind of the investors?
I think Forbes also just recently posted the information what they think the 5, biggest sectors for this year could be. Before I, tell about specific sectors, I think what's interesting and what we see, for example, in the Western Hemisphere of Europe, is that there are more and more secondary market transactions. So the secondary funds are actually growing. The fundraising for those secondary funds is much bigger than it was before. So we see that there is a huge requirement from the perspective of the investors to be able to liquidate their position easier than before. And this is the first thing that I would say has an impact. Second one is, of course, the debt that we just discussed, and this is definitely something that the markets are going to look into. And if you see what's happened during the 2023 in Poland, definitely an increase in the so-called mezzanine investments, so the equity connected with the debt. And because of the high cost of the debt in the past, or actually just recently, but
in the previous years,
the mezzanine debt is becoming more and more is becoming a tool for those companies to grow. In terms of the sectors, if you combine all those elements, of course, what we see on the market is a quite stable renewable energy market. And I'm aware that we talk mostly about Poland, but if you see at the broader CEE region, this is basically happening everywhere. So, Baltics are investing a lot in the offshore wind farm. Romania is investing a lot in both the solar and wind farms. Poland is more and more investing in a battery storage and, of course, offshore wind as well. But also what we're seeing is slowly hydrogen investments, right? So this is definitely a sector that will still continue to grow. If you look at the Polish market, potentially we will see more operational platforms being sold rather than the greenfield. It's mostly connected to the fact that people are in this market, have been in this market for a while. And so a lot of the properties that were quite interesting, or let's say they were very good in terms of the potential renewable energy investment, they're either sold or they are already in someone's hands. Also we have to say that there is a small problem with the access to the grid. It's mostly because we as a country need to grow the network, but it's not only our problem. If you look at the UK market, it's exactly the same issue. So just to give the comparison of those two, because we look at the UK market and think, wow, that's a big market with the big investments. They have exactly the same problems currently. Then the second sector I would mention is a tech sector. But within that, I would also put, of course, we talk about a lot about the AI, but it's not only impacting just purely tech companies, it's also impacting a number of manufacturing companies. And moreover, within that sector, I would also probably put any sort of defense technology, whether that's okay to say or not, but I think the markets are looking into defense technology more and more. This is becoming a market where they think they could make the money in the future. It's not a very good sign for the society as such, but generally speaking, that's where the investors see the potential to grow their companies. And I think those are more or less the two sectors, and as previously we discussed, more like the trends rather than the pure sectors.
And healthcare, for example, after COVID, do you see any signs that actually there is more and more even medtech or technologies combined with healthcare, or that's not really something?
A lot of medtech. This was also quite a sector in 2023. So if you discuss with the investors and you have a hospital for sale, there's a long list of investors waiting for that. Also, if you look at the vet market, there's a huge consolidation of the vet market right now in Poland. And it's not only being handled by the let's say big healthcare corporations that we have in Poland. So either Medicover or LuxMed, but there are also others that highly invest and potentially have even bigger portfolios of those vet companies. The operational business will not change massively throughout the time. So of course there will be at some point more people using the healthcare, let's say, technology or the services that the healthcare business is able to provide. But this will not change so significantly. If you look at the technology, look at what we've designed 10 years ago. Even if that was a great or even fantastic technology, it's no longer being used, or it's just not, it doesn't work to the standards that we require at this point in time. So, with those healthcare companies, the growth is stable, and the potential let's say, uptake of the customers is also stable. And the stability is a very, very important, let's say, factor at this point in time, I would say.
Oh, interesting point. But what about also Polish companies? Because as we mentioned, what we read in media is also that we can have, observe more and more success of the Polish companies, going abroad with the appetite of, mergers and acquisitions. So how do you look at it if you look at 2023? Is it really something that you observe as a growing trend?
Yes, definitely appetite. Huge appetite of Polish or even regional companies to invest abroad. This is also somehow connected to, let's say, a bigger pattern. So the foreign investors, they don't want to see just purely Polish companies. They're looking into bigger portfolios. They're looking into bigger companies with the operations also outside, Poland or outside our region. We've discussed about the value of the transactions. What we see and what we think based on the discussions with different market players is that the value of those deals will definitely grow this year. So for example, if you look at the last quarter of 2023, the number of the deals as such has grown about 25% in comparison to Q3. And the Polish investors, they have to see the value of going abroad, and they do actually see that value. And they want to. The foreign investors, they have a lot of money, and when you have, let's say, 100 million to invest in one company, you're not looking for the targets that are valued at 10 million, and we have many more 10 million targets in the region than 100 million euro targets. Obviously, that's changing, and this is why a number of those companies is going abroad in order to grow their own valuation, in order to show that they're not only able to use the technology that they've created on their domestic market, but also on the foreign markets. So that means that, okay, the concept was proved in Poland, but then the concept was actually proved also elsewhere. So that means that when a foreign investor is going to put more money into that company, this company will not only grow in Poland. There is always a limit of how much you can grow, how far you can grow. And they just want to see that when they go, for example, to Asia or when they go to United States, this company will do as well as it's doing here. So definitely we see the trend.
Part of the strategy and a little bit the necessity if you don't want to stop where you are.
Correct, definitely necessity.
Okay, you started talking a little bit about 2024 and the expectations, of course, in terms of the growing market, growing the number of the transaction and the valuation. So let's take maybe a deep dive into 2024. What are your highlights, looking also on different forecasts regarding the macroeconomic environment? So how do you see more stabilization or the growth, or what was the attitude and the appetite on the market?
So if you look at the Polish market, and I'm pretty sure everyone will agree, is that we stopped the business in October. Everyone just waited for what's going to happen.
In terms of the elections.
In terms of the elections. And it doesn't necessarily mean that, whichever party would win, this would change materially. It's just that investors like stability. So they just want to know the environment they're going to invest in. Whatever we thought is going to happen at the end of 2023, it slightly moved towards 2024. So therefore, if you listen to what, for example, the investors or the advisors in Davos are saying, well, they're much more optimistic than they were before. And let's hope it will stay that way.
So now we have to talk about ESG. And of course, that's also, I can assume that most of the investors now are actually, that's the must-have. I mean, being compliance, having an ESG strategy, whether you are already the company that is, under the requirements, or you are in the supply chain or in the value chain. I believe that the companies have to show and present their strategies toward these requirements. What's your take out on that?
Yes, much higher scrutiny in this regard. As an advisor, we get involved in different stages of the transaction. The aim of what we're doing is basically to secure that the risk for both parties, so both the seller in terms of their liability and for the buyer in terms of the potential to actually get the seller to pay for the damages in case there are any. We see that the buyers pay much more attention to those elements that they didn't see before. So of course, one of the elements is ESG. The other one is, for example, the review of the insurance policies that the companies have. Another one is cybersecurity. But if we talk purely about the ESG, for example, we see that, and you look, for example, at the US market, because it was brought here by the US market. Interestingly, everyone says it's quite expensive. And we have to say it out loud. It is just expensive. However, the companies anyway pay attention to that because the customers pay attention to that. And without the customers, their business is not going to work. While, for example, in US, when you talk to the private equity investors, they would say, well, I'm sure that at least half of them would say, we don't necessarily want this to be a factor, or we don't want you to make investments purely on using the ESG metrics, because that makes the investment much more expensive for us. That means we earn less. This hasn't changed to such extent in Poland or in the region or even in Europe. So Europe is definitely paying a lot of attention to the ESG element. What we see on the deals is that more often the buyers are actually conducting the due diligence. So that also impacts the new advisory business, which is being created around the whole ESG element. And what's also interesting is that when you compare B2B business with the B2C business, the investors are much more interested in the B2B business in the current environment. And often when you see a commercial agreement between two entrepreneurs or two companies or any professional entities, you see that often that entity, for example, will not buy your products if you don't show that your supply chain is sustainable, or that you treat everyone equally, or that your production does not impact the environment to the highest extent. So it's not only impacting purely M&A market, but it's also impacting the standard, commercial agreements that the companies are signing between themselves. Of course, the B2C market is generally much harder at this point in time because people, they just do not buy as much as they did before. So definitely the B2B business is an interesting piece. And in this, relationship, you have to pay much more attention to the ESG elements. If you look even at the law firms, they are creating a separate departments just to be able to advise on those elements. So it's not only, environmental advisors or the sustainability advisors, if we can tell that there are any, but also law firms, they look at the regulations. They see how those companies can on one hand apply those regulations, but on the other hand can actually stay, let's say, environment friendly.
Well, that's actually optimistic from my side, I would say, yes, because if we agree that this, ESG criteria can really serve something better, and the end goal is, of course, for all of us, a good one, yes, to save the planet, but also, human rights, because we have to remember about social impact as well and the governance. I think at the end of the day, it will be good for all of us, but of course, always change is something that you have to adjust, accept, and sometimes the time to accept the fact that you have to adjust. It's longer than and it should be under the circumstances. Okay, so I think that now let's just summarize maybe, the highlights for you for 2024, for people who are actually looking at the market. Maybe there are in those groups that, hold their breath in the fourth quarter of 2023 and waiting what will happen. So, short final one-liner in terms of 2024, how you would encourage this courage, or what would be your advice?
Definitely encourage. So on one hand, I would encourage potentially the viewers, but basically all the entrepreneurs to go abroad. This is definitely helping, and all the foreign investors look at this particular factor when they're trying to make an investment. On the other hand, for the foreign investors, they should definitely feel that it's a very good environment currently in Poland in order to make the investments. We are a very stable market if you compare to different markets from the region. The business is growing massively. We actually have a lot of free cash that a number of companies is just waiting to spend, but they just need maybe some better guidance. But also, from an investment perspective, the biggest value that you make is usually from synergy. So if you're a foreign investor, there are lots of synergies that can actually be achieved in Poland or in the region by acquiring those local companies. And for example, what we do, so the risking the transactions by using the transactional insurance policies, this is just an easy tool for the foreign investors to invest in Poland, but also for the Polish investors to go abroad. And I think this would be my takeaway from this conversation and from what we think is going to happen in 2024 is that you always look at the risk. Why not the risk your position? And by doing so, you'll just make a better investment.
Mm-hmm. Well, thank you very much. I love the word synergies because I think at the end of the day, I think wherever you look at, when we look about more partnerships, which also I think what you are saying is that actually we also are looking at the transactions, but it's not purely financial, but it's also about know-how. It's about looking for the synergies. At the end of the day, it's going much more in terms of win-win situation for both sides. So let's hope that these synergies will be visible on the markets. And I also think that encouraging Polish entrepreneurs to go abroad, especially that we already have several success stories. Let's hope that this trend will be getting stronger. Thank you very much.
Thank you very much. Thank you very much.